Good afternoon and welcome to FBN Charting Points. My name is Brian Como and today is December the 14th. All right, let's get rolling right into it. We got a couple of interesting charts to show you here today. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. The material is provided as is and for informational purposes only. It is not intended to be a substitute for specific financial, trading, legal, or tax advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the statements or any information contained in the material, and any liability, therefore, is expressly disclaimed. Past results are not necessarily indicative of future results. Okay, just wanted to talk a little bit about peas here. We don't show special crops charts very often on this segment, but today we did issue a recommendation to add to pea sales. We went from 50% covered to 70% in this move in order to take advantage of some price appreciation that we've seen in the marketplace as a result of India removing their tariffs from imported peas, which is actually a measure that they are using in order to reduce domestic prices in India and make food more affordable. But what it does is create a little bit of extra demand here for Canadian peas. And there is a deadline on it as well, which at this point is printed as March 31st. So there is a little bit of a hop, skip, and jump that needs to happen in order to get peas purchased, moved to the coast, and then on a ship to India before the deadline runs out. Now, there is a possibility that they will extend the deadline. I think there's actually a strong possibility that they'll extend the deadline. They just have to put a deadline on there anyway, and that deadline does kind of line up with the start of their harvest, so they may know a little bit more about what their crop looks like going forward. But there is a possibility, and I would say it's a strong possibility at this point, that that deadline gets extended anyway. So there could be further appreciation, price appreciation in peas. However, that's not a guarantee. We have seen some elevator companies pull their bids or reduce their bids after some gains. So we didn't want to look a gift horse in the mouth and wanted to make sure we took action when the market was giving us signals to do so. So that is what we did this time around. All right, moving into some more futures charts. I didn't put every chart in here. I just wanted to show some patterns and things that I thought were interesting. Here's soft red winter wheat, or Chicago CBOT wheat. It does look like it is forming a bit of a flag and pennant pattern. Now, what can be good about these patterns is if they move and break out into a bullish flag pattern, we can actually do a measured move on this and kind of, I'll see if I can do this with my trusty pen. This flagpole here that you see in the flag and pennant pattern becomes important as it, on a breakout, you can use a measured move that is similar in size to the original flag. That may bring Chicago up into the $7 area if that move comes to pass. And what we need to see in order for a confirmation of this move is for this pennant to continue for a little bit and then break out to the upside, and that would give us the signal that we would be moving, at least somewhere in the range of where the original flag move took place. So that could be, on the high end, I would say $7. Now, we know that there's a large short position in soft red winter wheat right now, and that could help become the catalyst. So that may be, if a technical breakout like this was to occur, that may be a further catalyst for technical traders to exit, take profits, or reduce their shorts in that market, and could possibly potentially mean a rally. Now, a move below the pennant is also possible, particularly as we approach these consolidating moving averages here now. So a move below that might actually signal, a move back towards previous lows. But there is some pretty strong support that is there as well. So if it does break below some technical signals on this flag and pennant move, I would expect a test of those previous lows. So that's kind of two scenarios that you could see. We want to wait and see what breakout occurs here. Here's soybean oil. I think soybean oil is an important commodity right now for canola. As you can see, it's kind of trying to make a double bottom here, or it's kind of basing some support just north of 48 cents a pound. It's dropped now to 49.5. We could see it come back down and test that 48.5 area. If it breaks below that, that would be a concern. But if this support does hold and we see it start to rally back afterwards, that might give us some good indication that we found some good longer term or heavier support here for soybean oil going forward. Euronext rapeseed is showing a little bit of technical weakness. It was in a relatively statically rising channel here, and it did break out below that. Now, it doesn't introduce a whole lot of risk. These previous lows would be kind of a magnet in the 420 area, so there might be another 10 euro of potential losses there. But if we start to kind of get down into those levels and move below some of those previous lows, that could be a bit of a danger sign for the rapeseed and canola market as a whole. So we want to kind of just be watching that. We are kind of seeing a similar thing in canola. Canola is a little bit more concerning from a technical standpoint, as the recent rally kind of rallied back to these previous lows and then failed to really decisively move above them. Didn't even go back to test the 20-day moving average, which is a bit of a concern, and is moving back lower. So this market continues to look weak from a technical standpoint. Again, we did make our last recommendation in this area here in the middle of November to move to 60%. I know there was a lot of folks who hadn't necessarily gotten to that level yet. So if you are starting to get concerned about this market a little bit more, have a conversation with your advisor. They may be able to help you out with some floor pricing strategies and things like that are either available in the over-the-counter market through grain elevators, etc., or they can help direct you to your broker to look at risk management strategies through FBN brokerage as well. All right, I did want to talk a little bit here about the US dollar. However, it looks like, hang on a sec, I'm just going to have to amend my presentation here because I wanted to showcase this in a stepped approach. So hang on one moment. I'll get back to where we need to be. Okay, so here's just the US dollar index chart on its own. You can see the last 2 days here have been extremely negative for the US dollar. What happened was the Fed came out with their interest rate policy announcement. They did, as the market expected, they stayed on rates. They did not change the rates. However, there was a very slight bias towards higher interest rates going forward, or a more hawkish tone. But what came out of the Fed was a very dovish, or is interpreted as being very dovish, and they started to talk about interest rate decreases on the horizon. So that really jostled the US dollar down, and it has completely made new lows here now, extending the losses from yesterday into today, and really opening up the market to a move, back to the 100 even level on the index. There isn't really much for support left before that. So we could continue to see weakness in the US dollar. Now, that's not all negative, depending on what you're looking for. So just to kind of give you an idea as to what the market is looking at right now is coming into this meeting, there was a 99% probability that the Fed was going to stay on rates, and a 1% probability that they were going to change rates or add 25 basis points or a quarter of a percentage point to rates. Now that's flipped. There is now, and I'll say only an 82% probability of a stay on rates in the next meeting, and an 18% chance now the market is pricing in that there's going to be a 25 basis point cut. So we could see the rates move from where they are right now, which is a range of 5.25 to 5.5, down to 5 to 5.25 in the next meeting. And as you can see on the implied rates, basis points, even through the month or through the year of 2024, by the time we get to the end of 2024, the market is starting to price in a 1.5% decline in interest rates in the US. That is a pretty significant shift in policy, and why we are seeing such a dramatic shift in the US dollar index. just kind of give you an idea as to what the projections look like. So this was one of the, this is called a dot plot, and it plots all of the Fed participants kind of where they feel the interest rates will be as we move towards the calendar year. And you can see that there's quite a number that are concentrated in that, 4.5 to 4.75 area. And then it moves lower even as we move into 2025. So a pretty big shift in the sentiment from the Fed. They're definitely turning more dovish on interest rates, which means slower growth and lower inflation does tend to mean lower commodity prices. So that's something to keep an eye on as well. Although sometimes the commodity price declines tend to lead some of the interest rates, and we have seen quite a number of declines in a lot of commodity markets in the recent past. So some of it might already be priced in, but it is still a risk that is present on the horizon here. There's always a bull market somewhere, though. The Canadian dollar is where we are seeing some of that play out as well. The Canadian dollar has moved now from where it was before the Fed, which was just around 73.5 cents. It's gained almost a full penny now to 74 or a little over 74.5. And you can see it's challenging old September highs here. So we could continue to see gains in the Canadian dollar. That might have a bit of a negative impact on such things as wheat basis levels, even canola futures if they're trading cash exports and things like that. The products, of course, that we sell, canola oil, canola meals, all sold in US dollars. Any of our products that are sold in US dollars, which is most of them, do have an element of risk on a rising Canadian dollar. So you might start hearing some of that if elevators start, fading their bids a little bit on, particularly on the wheat. You notice this, they will often cite strength in the Canadian dollar. So that's something to be aware of as well. Here's what 10-year note yields are looking like. So a good thing is that borrowing costs may come down sharply here. So if your farm has some leverage to it, or you're managing debt right now in an environment that has been rising pretty steadily, you might see some relief there. This is the U.S. 10-year note yields. Canada isn't necessarily as aggressively looking at downside, but I think where the U.S. goes, Canada will go as well. So we'll probably see some rate reduction signals ahead as well. If you're looking for something to invest money in, the 10-year note is something that is gaining some bullish attention as well. So it's kind of the opposite of the yield, but just to kind of show you the effects that this is having. Also, in the equity space, we are seeing quite a lot of positive effects. The equity markets had peeled back through much of the summer and fall, as there was still concerns about inflation that wasn't being tampered. But as the CPI numbers started to level off and the employment numbers started to level off, we did start to see the equity markets, behave more positively. There could have been a thesis that it was now kind of done and that the equities had priced in a lot of the changes to upcoming interest rates. But I think it's evidence that this was a bit of a surprise to the market by looking at how the equities have responded here in these markets. This is the S&P, which is kind of a blue chip basket of stocks, a pretty broad one overall. And as you can see, it is breaking above into new high territory. Not in the high territory that we saw back in 2022 just yet, but it's definitely marching up towards that. So we might continue to see gains in this market, in the equities market as well, as the market continues to peel off interest rate hikes or price in more aggressive interest rate cuts than was expected before. Here's the NASDAQ, which is largely tech stocks. Similar story, lots of bullishness here. And the Dow has also, screamed to new highs as well. So there is some positive things happening as far as the economy goes, as far as the equity markets go. So there's always, there always is a bull market somewhere. We do want to make sure that we are covering risks in the ag sector, as if the inflation story is diminishing, it might have some negative impacts on commodities as a whole, or a basket of commodities. Higher Canadian dollar does tend to have a bit of a negative impact on our Canadian cash prices for grains as well. So just wanted to keep everyone abreast of that and make sure that we're telling the whole story. So thanks for tuning in. We'll see you again next week, which is, I guess, the last week of business before Christmas. So we'll see you again next week. Have a great weekend, and we'll see you again later.